Hey everyone, in this video, I'm going to share with you a quick way that you can qualify for a tax deduction on your 2021 taxes, although we're already in the tax season, it's 2022, and save for your retirement at the very same time. So stay tuned. So let's talk about how any contributions that you make into a traditional IRA. IRA stands for Individual Retirement Account. This is an investment account that you would establish for your retirement savings. Most folks don't know that the contributions that you put into a traditional IRA, up to certain limits, of course, can actually be deducted to offset your income on your tax return. So you still have the opportunity to do this, although we're well into 2022. It's February 2022. You still could take advantage of this quick tip. Welcome back to my channel. My name is Shantae Moore. On my channel, I create content where I share different aspects of financial literacy from my 16 years of experience as a licensed financial professional. I would be greatly appreciated if you could like the video, subscribe, but also feel free to leave a comment and let me know if any of this information was useful for you or if you actually did take advantage of this deduction. So let's watch this snippet from a webinar that I recorded a few weeks ago called Traditional IRA versus Roth IRA. You'll also be able to see the link. I'll post it here on the video as well so that you can access the full webinar. But I did want to take a couple minutes from it to give you this quick tip and go in depth about how you can take this deduction and hopefully you'll qualify for it. So let's continue talking about contributions. So as I mentioned, as long as you have taxable income, you can open the Roth IRA and contribute to it, again, with the taxable income. And the first tax benefit that you have with an IRA for the traditional side is that you're actually able to also deduct your contributions when you file your tax returns. And that's another reason why I wanted to talk about this tonight, because we have, 4 months before the IRS tax deadline in April. So you're actually able, the IRS says, thank you, Shantae, you're saving for your own retirement. We're going to give you a tax deduction on your income, on your tax return for doing so. And typically there are limits as well for how much you can deduct regarding your contributions. So for example, let's say you make a full year contribution, which is that $6,000 if you're under age 50, $7,000 if you're over age 50. Again, they do look at your income to determine how much of that can you deduct. So for 2021, if you were single or head of household, once you get into that $66,000 income, the IRS says, you can make a full deduction. So I'm actually going to go to their website. So anything that I'm talking about, again, I want you to fact check. Go back to the IRS website there. I try to post some of the links in the presentation, but this is where you can determine how much can I actually deduct, based on my income. So right here it says 2021. And it also matters, which I didn't put on the slide just yet, is if you actually have a retirement plan at the job. So one of the questions was, if I have a job, I have a retirement account at work, can I contribute to this? Yes, but there's limitations on how to do so. So let's say you have an employer, which most people do, and they want to open an IRA to invest for their retirement. So you'll look at this link for 2021, and it says if you are covered by a retirement plan at work, and you are single or head of household, and your income is $66,000 or less, you can deduct the full amount of your contribution. So up to that $6,000, up to that $7,000. If you make between $66,000 and $76,000, there's a partial deduction. If your income's over $76,000, there's no deduction. So I don't go into all these details. I just want to show you where to go to look and check for yourself, because it depends on your filing status and it depends on your income, how much you can actually deduct. So I'm going to post this link in the chat so everyone could click on it real quickly if you want to use it as a point of reference as I go through the presentation. So when it comes to, let me go back to the presentation. So when it comes to the Roth IRA though, there are no deductions. So you get tax benefits elsewhere, but as far as reducing your income, the tax deduction, there are no deductions from contributing to a Roth IRA. So again, if you need that tax deduction, because so really the question you should be asking yourself is, am I paying a lot in taxes? How do I want to reduce my taxes on April 15th? Maybe open a traditional IRA and funding it might help you because you'll get that deduction. Now, that's something you also want to sit down and talk to with your tax person to figure out if that makes sense for you. So when it comes to your 2021 taxes, everyone should know you have until Monday, April 18th, 2022 to file your taxes. What a lot of people don't know, the reason why I'm talking about, deductions and contributions is because when it comes to IRAs, you actually have until the year's following tax deadline to make IRA contributions for the prior year. So if you're learning this tonight and you're like, you know what, I wish I had an IRA. I wish I established a traditional IRA because I really need that tax deduction. You can actually open a traditional IRA and contribute that $6,000, $7,000 or any amount up into those limits. You can contribute those through the tax filing deadline of April 18th. Probably I would do it by that Friday or a couple of days before, and still indicate to the investment company, I'm putting in this money, but I want it to count for 2021 so that I can deduct it on my 2021 taxes. So that's why I'm talking about it tonight. So give you time. So this is something you might want to do, that you want to take advantage of for 2021. Still, you can do that. So even if you had a traditional IRA, or if you had a traditional IRA open last year and maybe you didn't contribute to it, or you didn't max out the $6,000 or $7,000, you can still put money in. When you make a deposit, the financial institution will ask you, is this for 2021 or 2022? You will tell them, no, this is for 2021. Make sure it counts for 2021. So when you file your taxes, you can let your tax preparer know how much you actually did deduct, and they'll calculate on your tax return. And actually, I did want to show you the tax return. I'm not trying to get too far into the weeds in it, but I really want to show you where the deduction actually comes from. So when you file your taxes, you would have to file a 1040 to get the deduction. That's for an individual. This is on your individual tax return. You would complete a Schedule 1, which will outline any additions to your income or adjustments to your income. So I'm going to scroll to the adjustments to income. And here, line item 20. This is where your tax preparer would indicate, oh yeah, Shantae made a $6,000 deduction. So they'll write, $6,000 on this line. And this will actually feed over to your 1040. So on your 1040, when your tax preparer completes this for you, here, so the first part, they indicate what did you earn. We have to disclose our income. If we made money from the stock market, all that stuff, pensions, annuities, IRA distributions, Social Security, all that money that you receive, you have to disclose it. But as you can see, line item number 10, it says adjustments to income from Schedule 1. So this is where that $6,000 deduction would reduce your income. So ultimately, that $6,000 would reduce your taxable income, because your taxable income is then what calculates the tax that you earn on the next page. So this is how you get the deduction. Again, I hope that's helpful. I just, I'm a tax nerd. I'm not a tax person at all. I'm not a tax planner, but I know enough to be dangerous with it. But that's how you get the deduction. So again, if you need that extra, you need to reduce your taxable taxes. That's how you could do it through establishing the traditional IRA. And obviously you're saving for your own retirement anyway. Thank you for watching this video. I hope it was helpful for you. But also, again, please subscribe, hit the notification bell so you can be informed of when I post any more videos, which of course will be sharing financial tips and resources. Talk to you soon.